We're joined now on the Skype by Tal Keinan, CEO and co-founder of investment management firm Clarity Capital. Mr. Keinan,
thank you for having me, Benjamin.
So the markets have been characterized by extreme volatility in recent weeks, and just last week on Wednesday and Thursday, we saw Wall Street drop tremendously as investors were flocking from stocks into bonds. What's going on?
Well, I think there are a couple things we should lay out in advance. One is, retrospectively, everything looks much more clear than it does looking forward, and I think we should take that as a warning against any explanations of market behavior that are too precise. If we had all the answers looking backwards, we'd be much better looking forward. So let's start with that. I think there are two things going on. One is something that you touched on in the last piece, which is sentiment. Okay, so it's tough really to know how much to attribute to something like an Ebola scare or something like that. But that's certainly been definitely a factor that's been filling the airways and the markets recently. So people are definitely focused on that. There are some underlying economic fundamentals that have changed and worsened over time, and I think that is also part of the story.
Okay. I mean, would you say that this is a gambler's market, or is there some logic to the situation?
Right. Gambler's market, we are not rushing to sell right now. I'd say this: you have technicals that are supporting a near-term rally. The markets are quite oversold at the moment. Equities are oversold. The dollar is probably overbought at the moment. That's short term. Longer term, I do think you need to look a little bit at the fundamentals, and I think a few things have changed over time. So the headwinds that we're looking at kind of medium term are, number one, U.S. dollar strength. The U.S. economy and the U.S. Fed is on a tightening cycle, while the rest of the world is on an easing cycle, and that will definitely speak to dollar strength going forward. And that is something that is going to provide headwinds, particularly to the U.S. economy. And what we see is part of the reason for this is economic weakness pretty much everywhere else in the world. German manufacturing is down. Europe is probably in recession. Japan has dipped back into probably temporary recession. The Chinese economy is expanding at below expectation paces. So we are looking at a relatively unpleasant economic outlook. This is not a crash by any means. Equity markets will be volatile. You can't just go in one direction, and we've had quite a run in recent months. So I think this correction is something that was coming. It was very difficult to predict the timing, but it's something that was coming. To jump in right now aggressively and buy, or jump in aggressively and sell, I think to answer your question, that would be a gamble.
Okay, gotcha. Well, Tal Keinan, CEO and co-founder of Clarity Capital, thank you very much for joining us.